Hi traders, welcome back to another lesson. This lesson is going to cover another candlestick pattern. So this was a question I received from Lucas. So Lucas is trying to detect this candlestick pattern here. So this is a bearish example. This is called a dark cloud cover candle. So what he's looking for is, I'm guessing this is an RSI. He's looking for the RSI to go overbought and then for this candlestick pattern to print onto his chart. So the way we identify this candlestick pattern is the open price of the bearish candle is above the bullish candle's closed price. So you can see that here. And then this red candle, this bearish candle, closes within the candle body of the bullish candle preceding it. So if this were to close as a bearish engulfing candle, that wouldn't count. And if it were to close higher than the previous candle's closing price, then that would make this candle a gap candle. And that is not what we want either. So we're looking for a candle that opens higher than the previous bullish candle and then closes back within that previous candle's range. And then obviously for our bullish example, this is called a bullish piercing line. And we just do pretty much the opposite. So we're looking for a bullish candle that opens lower than the previous bearish candle's close. And then this bullish candle must close within the previous bearish candle's body. And all of this must happen while the RSI is oversold. So this is very similar to some of the other candlestick patterns that I've shown in the course. The main difference is that we're trying to detect a closing price within the previous candle's range, which means we need to do things a little bit differently. So let's hop over to the Pine Script editor and get our hands dirty with some code. So here I am with a blank script. Nothing has been changed except these comments and the study title. All I've got on my chart is the RSI indicator because we're going to be using that as a filter or a condition. So we want to detect these bearish dark cloud cover candles and bullish piercing line candles whenever the RSI is overbought or oversold. So let's get into it. Let's open up the source code here and start typing. So as always, the first thing I like to do is get user input, assuming I know what user input I need. And for this particular script, I do know I need an RSI length and an RSI overbought and oversold threshold. So get user input. The first one is an RSI length. Using the input function, we'll give it a title of RSI length, a type of input.integer, so it's a whole number. The default value is going to be 7 for this example. Normally you would probably make this 14. That would be a standard RSI length. But for demonstration purposes in this lesson, I want to detect more signals than a 14 length period RSI normally would. So you can set this to whatever you want. That's the point of making user input. But today we're just going to leave it as 7. Next thing we need is an RSI overbought and RSI oversold threshold. So input title RSI overbought. The type of this is going to be input.float. The reason I like to do that is because the RSI value is actually a floating point value. It's not an integer. And so by making the RSI overbought and oversold threshold values a float, that gives the user a lot more control over what their overbought and oversold level is. For example, you could set it to 23.62 instead of just 23, and you get the idea. So this one is going to be a default value of 70.0, just a standard RSI overbought level there. I'm going to copy this line of code, flip this to OS and this to 30. So now we have our RSI values. Let's move on to detecting our candlestick patterns. But before we do that, we should probably get the current RSI value. So that's easy. We just declare a new variable called, in this case, RSI. We use the inbuilt RSI function. You need to pass it a price source to calculate the RSI on. By default, you would use a closing price, and we pass our RSI length parameter into this function. That will give us the current RSI for the current candle, and we can use that later on to check our filter to make sure that RSI conditions are met. So the first candlestick pattern I want to detect here is the bullish piercing line. So I'm going to declare this variable as just BPC. And what we need to do now is we need to check, did the current candle open lower than the previous candle's close? So let's open this up a bit. This candlestick pattern here is not actually a bullish piercing line because this candle, if you look really closely, closed higher than the previous candle's open. But this candle here is a bullish piercing line. So we'll focus on this one while we're coding. So what we're looking for is, did the current candle open lower than the previous candle's close? And did the current candle's closing price close higher than the previous candle's close? So this is our current candle's closing price. Did it close higher than the previous candle's close? And did the current candle's closing price close lower than the previous candle's open? Sorry, I'm making a lot of typos today because I've got a giant microphone in front of my face while I'm trying to type. But this, what we have here, will detect a bullish piercing line because the current candle's close is within the previous candle's open and the previous candle's close, and the current candle opened lower than the previous candle's close. The last thing we should probably do with this candlestick pattern check is just confirm that the previous candle was indeed bearish. So let's add on one last condition here. We want to check, did the previous candle close lower than the previous candle's open? So just to confirm that we are indeed detecting this candlestick pattern, let's quickly add in a plot shape function to draw these signals to the chart. So I'm going to use the inbuilt plot shape function. We're going to check our BPC condition. If that's true, it'll draw a shape. If it's false, it will draw nothing. We're going to give it a style shape.triangle up, since it's a long signal. Set the location to location.below bar. We'll set the color to color.green, and we'll give it some text too. We'll just write long underneath this shape, and we'll also title it so that we can modify this all these style settings in the settings menu. So now we can get rid of our plot close, because every script needs at least one plot call. It needs to draw something to the chart or output something. But we're doing that now with our plot shape function, so I can get rid of that. Now if I save the script, we are detecting our bullish piercing line candles. And just before I continue, I should set overlay to true here. I forgot to do that at the start of the script. I'm not sure why it just automatically drew onto the chart. But anyway, if you're following along and your script is not doing this, just make sure you've set overlay to true. And there we have it. We are detecting bullish piercing line candles. So before we start checking our RSI conditions, let's do the same for the bearish dark cloud cover candle. So here I'm going to write a new comment, detect bearish dark cloud cover. And I'm going to call this variable DCC, short for dark cloud cover. And we basically have to do everything we did here, but in reverse, like we're flipping these operators around, and our price sources as well. So what we need to do here to check for a bearish dark cloud cover, which is this candlestick pattern right here, this red candle here meets our conditions for a bearish dark cloud cover. So as I'm writing this code out, just use this candlestick right here as your reference. So what we need to do is we need to check, did the current candle open greater than the previous candle's closing price? So that's the first condition met. And did the current candle's closing price close greater than the previous candle's opening price? That condition is also met. And did the current candle's closing price close lower than the previous candle's closing price? Because the previous candle's closing price is a bullish candle, we need to change our price source from an open to a close. And that condition is also met. The closing price of our red candle is less than the previous candle's closing price, but greater than the previous candle's opening price. And it opened higher than the previous candle's closing price. So that's our bearish dark cloud cover candlestick right there. The last thing I'd like to do, just to make sure that we are definitely only detecting the candlestick patterns we want, is I'm going to check, did the previous candle close bullish? Or in other words, did the previous candle's closing price close greater than its opening price? That's a green candle, and that's the candlestick pattern we want to find. So now I can copy this plot shape function, paste it in there, change this to dark cloud cover, change the triangle to triangle down, since this is a short, we're selling this market. Change the location to above bar and the color to red, and obviously our text to short. And there we go. Now if I save the script, we should be detecting this candlestick pattern, yep, as well as our bullish piercing lines. So far, so good. The final thing we need to do here is check our RSI conditions, because we don't want to be detecting these candlestick patterns in the middle of a rally in regards to the bearish dark cloud cover. And we don't want to detect these candlestick patterns in the middle of a sell-off. In the case of bullish piercing lines, we want to detect these candlestick patterns when price is at an extreme, since this is a reversal candlestick pattern. So let's open up the editor again. And what I'm going to do here to keep things sort of clean and simple so that we can keep our code in sections, I feel like this will just make it easy to understand what we're doing. We're going to split our candlestick patterns from our long and short signals. So I'll show you what I mean. I'm going to create a new couple of variables here, and this comment is going to say determine if the current bar meets our conditions. So we're already detecting our candlestick patterns. Now we need to combine our candlestick patterns with our market conditions. In this case, the RSI at an extreme. So the first one I'm going to detect is a long signal. And what we need to happen in order for a long signal to be considered valid is we need to check if the RSI value is less than or equal to our RSI oversold threshold. So in this case, 30. If the RSI is less than or equal to 30, and we have detected a bullish piercing line candlestick pattern, then our long signal will be set to true. And paste that over to our plot shape function. And now if I save the script, this long candlestick pattern here will go away since the RSI is not oversold on that bar. So let's save the script. And there we go. But before I continue, I should really change this to the previous candle being oversold. So put a historical operator here, square brackets, and then a 1. That will check if the previous candle's bar was oversold before our bullish piercing line occurred. Now, the reason you want to do that with this candlestick pattern and most overbought and oversold patterns is that sometimes, like this, for example, if we checked if the current bar's RSI value was overbought, that condition would fail because this bearish candle has closed back below our overbought threshold. So we want to check the previous bar's RSI value, not the current bar for our candlestick pattern. This is true of bullish engulfing and bearish engulfing candlestick patterns too when using the RSI, and even hammer candles. So any reversal candlestick pattern often will take the RSI from overbought back below our overbought threshold or oversold threshold. So keep that in mind when using these sort of indicator values as your conditions. And you'd want to do the same thing if you're using a stochastic or any other oscillator. So that's our long signal. Let's detect our short signals. And we're going to do exactly the same thing here, but flip our operator around. Was the previous bar's RSI greater than or equal to our RSI overbought threshold? And do we have a dark cloud cover candle? Let's paste that into our plot shape function here. Save the script, and this signal will go away. That signal will go away. And all we're left with is our candlestick pattern at an extreme price rally. And we are detecting pretty decent reversal candlestick patterns. Obviously, this one here would have been a losing trade. But that's why we created user settings, so the user can adjust these RSI values, and maybe that will increase the accuracy of these candlestick patterns, depending on how the user wants to trade this. And of course, this is not an invitation to trade this indicator. I have no idea if this is profitable or not. You'd have to go and back test it. This is obviously just for examples and demonstration purposes. If it were me trading a strategy like this, I would be combining this sort of price action pattern with more conditions than just an RSI. A perfect example of this would be support and resistance. So look for a previous support or consolidation level, wait for price to come up into that level, wait for the RSI to go overbought, and then wait for our candlestick pattern to use this candlestick pattern for trend continuation. A candlestick pattern like this, I haven't back tested it, but I would imagine it would be more effective as a trend continuation pattern rather than a mean reversion or counter trend pattern. But that's just how I would personally trade it. But anyway, that's pretty much it for this script. This will detect bullish piercing line candles and bearish dark cloud cover candles when our RSI conditions are met. So that's mission accomplished right there. But I want to show you one last little detail that I was playing around with when I was trying to write this script. Sometimes these candlestick patterns don't quite look right. For example, here's a good example. This candlestick pattern technically meets our conditions. It opened higher than the previous bar's close, and it closed back within the previous bar's body. But it's clearly not ideal. What you really want to see with this candlestick pattern is a noticeable gap between the previous candle's closing price and the candlestick pattern itself. So the best way I could think of to do this was to add in a Pip margin check. So we want a minimum distance between the previous candle's closing price and our entry candle's opening price. So let me show you how I achieve that. Now this is all optional. What I'm about to show you now is slightly more advanced, but I figure while we're here, we might as well. So what I want to do here is add one more user variable called margin. And I'm going to call this Pip margin. I'm going to give it a type of input.float. And I'm going to set the default value to 0.0. So by default, this is disabled. This condition will be ignored. But if the user wants to turn this on, they can come up into the settings menu and increase this number. And I'll show you what this number will do in a second. So after we've detected our candlestick patterns, we then want to check the pip distance between the candle bodies. So that's easy enough to do. All we're going to do here is I'll create two new variables. The first one will be BPC margin, and that's going to be set to this expression here. We're going to get the previous candle's closing price. So this is for bullish candles. So we're looking for bullish candles here. So we're getting the previous candle's closing price. So we're minusing or subtracting that closing price from the current candle's opening price. And that will give us the distance in pips between our two candles. We're going to do the same for our bearish candles, our dark cloud cover, except this time we're going to get the current candle's opening price and subtract it from the previous candle's closing price. And that will give us the distance from our entry candlestick pattern to the previous candlestick pattern. Once we have those two values, the last thing we need to do is just check in our long signal. This is why I like to separate our candlestick patterns from our actual market conditions. Just makes the code a little bit easier to read, especially much later on if you come back to this script after a few months of not working on it. It's just much easier to see at a glance what you're doing with your code when you separate all these conditions. You could of course combine all of these conditions into one variable, and we could just check on this BPC if the RSI is overbought and oversold and if our margin requirement is met. But I find that it's a better practice to expand your code this way. There's no penalties for it. You know, Pine Script allows you to do this, so you might as well take advantage of it to keep your code tidy. So the final thing we need to do here is check, is our BPC margin, our bullish piercing candle, is the margin, the pip distance between those two candles greater than or equal to our margin input up here? Then we need to do exactly the same thing for our dark cloud cover margin. Is that also greater than or equal to our margin input variable? Now if I save the script, that won't change anything. We'll still be detecting all of these candlestick patterns. But now we can come up into the settings menu and increase this pip margin. In this case, a pip would be 0.1 price units. So let's just set it to that to begin with. Click OK, and that hasn't changed much at all. But this is the candlestick pattern that we don't really want to detect. So let's use this as our example. Zoom in a little bit. And so the distance between this is about 0.2. So let's set this to 0.3. There we go. Now that candlestick pattern has gone away, and so have our other ones. So let's try 0.2. There we go. That's a bit better. So now this, I can't even see it anymore. Where was it? So that's why we don't want to detect this candlestick pattern. Oh, there it is. This one here. Now that pattern has gone away, but we are still detecting this pattern down here, which is beautiful because that was a pretty good reversal signal. And again, remember, you wouldn't want to trade this just in the middle of nowhere. The best thing to do would be to confirm that this is at some sort of structure level. So if you zoom out the chart, yeah, we definitely are. Look at this major swing low. Price had a major rally from there on this time frame at least. And then when it got back down here, our conditions were met. Our RSI was oversold. We had our bullish piercing line, and then we had a very nice rally out of here. So this is a great signal. This is what we want to detect. This in here, This I'd probably trade as well, since we were at a previous swing low. So obviously these candlestick patterns, you'll never find one that is 100% accurate and never loses trades. The whole idea is to find good setups that offer a really nice risk reward profile. So with an average reward of around 3 to 1, you can calculate your minimum win rate here. If you're risking 1% per trade, then you want to divide 1 by 1 plus your risk reward. And that equals 0.25. So with an average risk reward of 3 to 1, you only need to win 25% of your trades in order to break even. If you win any higher than that, then you're starting to make money. So this isn't a trading course. I'm not teaching you guys how to trade. Hopefully you already know most of the basics regarding trading. If you're learning Pine Script, I would imagine most of you would be experienced traders by now if you're looking into this language. And if not, that's even better, because learning this stuff will definitely improve your trading. Understanding price action on an intimate level, a very detailed level, so that you can actually code scripts to detect these candlestick patterns, that will really help you with your analysis in your trading, especially if you're an objective rules-based trader, which a lot of traders are, and for good reason. Makes it a lot easier to develop strategies that are easy to execute consistently. But anyway, that's it for this lesson. Let's just quickly jump back over to Apple and we'll play around with this this new filter we made. Let's set it back to 0.1, and that's actually too high on this market, because if you look at this here, our pip is 2 decimal places, so 0.03. So let's set this to 0.01, and there we are. We're now detecting our candlestick patterns. If we set it back to 0, let's see if there's any patterns that don't look right. This is one here. I mean, this technically meets our conditions, but maybe you don't want to detect that. So let's try setting this to 0.02. That goes away, but our more accurate candlestick patterns are still being detected. Perfect. And that is a successful pip margin filter added to the script. And that brings me to the end of this lesson. This was a little bit longer than I expected it to be, but I hope you found this interesting. I hope that this inspired some ideas for you to go out and pursue. Maybe you want to combine this with other market conditions. You could try using a stochastic instead of an RSI, or you could throw in an EMA. You could check to make sure that the entry candle is the lowest candle over the past X amount of bars. There's all sorts of filters you could add to improve the accuracy of this script. And one very important thing I forgot to mention about this candlestick pattern is that a lot of traders define it as a bullish candle, in the case of a bullish piercing candle, closing above the 50% mark of the previous candle, or for a bearish candle closing below the previous 50% mark. So just before I wrap this lesson up, I should probably really quickly show you how to add that filter to the script. So this is actually really simple to do. I'll just quickly add in a new section of code here below our pip margin filter. I'm going to say here, piercing line filter. And now what we need to do before we can determine whether or not the current bar closes beyond the previous bar's 50% mark is we need to calculate the 50% mark. So I'm going to create a new variable here called piercing line. And that's going to be set to the previous low minus the previous high multiplied by 0.5 or 50%. And then we need to add the previous high back onto this result, this value. And that will give us the 50% price of the previous candle. So if we're looking at this candle, for example, it will calculate what the 50% mark in terms of price is for that candle. And this is from the high to the low. So now that we have that value, it's very easy to check now if the current candle closes beyond that value. So for our long pierce filter, I'm just going to call this long pierce, and it's going to be set to, is the closing price greater than or equal to the piercing line? And for short pierce, it's going to be the opposite. Does the current bar close less than or equal to the piercing line? And then finally, all we need to do is add this filter onto the end of our long and short signal checks. So I'll just copy and paste those over. And now if I save the script, we will only be detecting bullish piercing line candles or bearish dark cloud candles. that close below the 50% mark of the preceding candle. So quite a simple filter there, but I'm sure it will dramatically increase the accuracy of this pattern since it is intended to be used as a reversal pattern. So you want the momentum to be confirmed by a strong close on that reversal candle. But that's it for today. Good luck with your trading, and I will see you in the next lesson. So that's it for this lesson. I hope you found that interesting and helpful. And if you did and you want to learn more about Pine Script, head over to pinescriptmastery.com. You'll find my free basics course. It's completely free, 18 lessons in there that will introduce you to the absolute basics of Pine Script. And for those traders who want to take their trading and scripting to the next level, then I have the Pine Script Mastery course, which has 84 lessons and over a dozen hours of content. And these lessons go into great detail about the Pine Scripting language and will really help you take your trading game to the next level. Otherwise, if you don't want to pay for this course, that's fine. Stick around on this YouTube channel, hit the subscribe button, and I'll be back real soon with some more free content. In the meantime, good luck with your trading, and I'll see you in the next video.